All right, we just do the reviews. Basically, three markets: YM, crude, gold. I think I already did the YM, but I don't remember. So anyway, what do you see? The market is in an uptrend. On the left-hand side, it's like a higher time frame. On the right-hand side, it's a lower time frame. So, but it's really brick sizes. It's the same concept. You see here, you have a rally 220. You have a pullback 330. Not that good, but it goes right to support. Right. So now here's the thing: when these markets they go to support, a lot of times there's like a little wick that's created, and that's what we see here. This is your left-hand side, and I'm going to go over some stuff here as well. So this is your left-hand side rally in top. At top of the rally, you have selling pressure here. You have fall through. So you have selling pressure and fall through. You take a look at the ES also is breaking. So what's this mean? Well, whenever you have sound pressure, you have to quantify it. So I mean, this is the biggest down move in 17 waves. But what's most important is this. You see this right here with the big spike? All right, that is telling you that this is selling pressure. And I want to also see if there's any volume in the background here. I don't really see any volume in the background, but I do notice one minor thing, and that is on this 3 brick wave up, there's 6 volume. On the next 3 brick wave up here, there's also 6 volume. On the next 3 brick wave up, there is 11 volume. On the next 3 brick wave up, and I'm just looking at 3 brick waves, there's 14 volume. So we see when we're taking a look at 3 brick waves, what do you notice? This 3 brick wave has the highest volume out of this 3 brick wave, this 3 brick wave, and the last 3 brick wave. This 3 brick wave has 6. This 3 brick wave has 6. This 3 brick wave has 11. That's a red flag. This 3 brick wave has 14. So this is a hint. This is a hint that there's effort. Okay, but you need to be looking at it. It's not overt. All right, unless you basically are already looking for it. Like if you're looking for climaxes, volume of the top, effort, then you know that okay, there it is. After that, there's selling pressure, and there has follow through. So at this point, the trend has changed, and of course the US also breaking, and then you have the really nice breakdown with the biggest move in 13 waves right here. The market is broken. Now be careful, because a lot of times when the market breaks and goes down, especially if it goes straight down, you have a counter trend rally. So there's trends come in 2 flavors. They come in trend and counter trend. That counter trend, it might get caught like, okay, right here's the counter trend. But understand that this is a counter trend, and it offers the short opportunity. A lot of times it's just a pullback. So it's not like, okay, yeah, I should go long. This is the counter trend to set up the test of the breakdown. It's nothing more than this breakdown being tested right here. That's all it is. All right, so that's very important. Then when you, just like a rally has a pullback, a trend has a counter trend. The rally has a pullback that'll go like, okay, 50% or 61 or whatever. Same thing here. It's just a pullback trend, and it needs to be understood as such. Otherwise, if you're just trading signals, you're going to have a very hard time. The dominant piece of information is right here, the volume. Right here, the volume is speaking tons. Specifically, it's saying I'm broke. This is the bar that breaks the back of the trend, and it should be labeled as you call it breakout or what? I don't know. It's not really a regular breakout. It's more of like the trend break bar, the trend backbreaker. Or as Wyckoff said, the bar that breaks the back of the trend. That's what he said. Anyway, so at first, like, I'm very skeptical, but knowing that they're shortening of the thrust with volume, making the difference of there being effort on the way up, meaning it's hard to make progress, then the selling, then the break, then the follow through. There's no question in my mind that the market is broken the uptrend. And this is a rally top. By the way, this is not really, if you're going to short, you have to really know how to do that. Because a lot of times in strong uptrends, when they pull back, they have an upthrust after distribution. And in strong downtrends, they have that spring after the sign of strength, like towards the end, that shakes everyone out. All right, so you just have to know that, be ready for it. Anyway, so that it goes right into this area, and this is a very nice place to take the short. Why? Because you have these guys at your back. The strong money is at your back. So it's really nice to, lean on them. All right, now, market goes down, down, down. Here you have an upthrust. Do you know this is upthrust? You only know after the fact, but there's always a potential that a high volume wave or big wave is nothing more than an upthrust, meaning it's a form of redistribution. What is being taken? The stops. So you have the sell stops, the buy stops. So they're buying what smart money is selling, allowing smart money to establish more sells, and then it goes down and down and down some more. Okay. All right. So here you have climactic action. Okay. All right. Now I'm going to go into something really important. So hold on. All right. Now, and watch how I build the argument here. So we know that in directional trading, there's no way to make money other than buy low, sell high. All right. Now, from this model, this basic principle, or I don't even know, it's the common sense principle. The next thing that is derived from this is accumulation, markup, distribution, markdown. This is the Wyckoff cycle. Believe me, this is nothing more than buy low, sell high. All right, this is buy low, sell high. That's how you know that this is a valid, this is very valid. This 100% can be proven, and it is the logical extension or corollary of buy low, sell high is accumulation, markup, distribution, markdown. The four phases, the cycles. All right. Now, in this, we know that markup is trend and markdown is trend. It's trend markup, trend markdown. All right. So the chief characteristics of markup and markdown, which is nothing more than up and down trend, is what? So we're going to write that down. Markup and markdown. Typically, they have both higher highs and higher lows, along with lower high and lower low, right? That's for markdown. All right. Now, this means you can have a lower low, but when you start having lower high and lower low, there's a problem. It could be a shakeout, yes. It could be a counter trend to go and test some level that hasn't been tested. But in general, this is the truth. Like, it's higher highs and higher lows. All right. Now, that doesn't mean you can't have internal and external trends, structure, all that stuff. But generally, this is it. This is the general rule. Now, the question I'm going to pose is if you say trend is higher high, higher lows, and trend is markup and markdown, and markup and markdown are part of a cycle of accumulation, markup, distribution, and markdown, then tell me this. What is the characteristic of accumulation and distribution? Since we have taken the characteristics of markup and markdown, which is just uptrend and downtrend, and said it is higher high, higher lows, why not take the other two phases and say, what are the characteristics of accumulation distribution? You will always hear everybody talking about higher high, higher low, higher high, higher low, all the time, right? That's what you hear. And then within this, you get, okay, there's some internal trend or whatever, or like that on a lower time frame because of fractal and all that shit. All right, so right, you got all that, right? So you say, okay, all right, higher high, higher low. Right. Say when you go to a lower time frame, that's what you get. Right? It's a higher high, higher low, and fractals within trends, basically. Meaning a wave is on one time frame is a trend on another. So you always hear, okay, higher high, right? That's what you hear. This is like the common thing. And saying the chief characteristic of trend is higher high and higher low, right? Always hear that. And downtrend is vice versa, low high, low lows. Now I'm saying, well, if you got your trend and this higher high, higher low uptrend is nothing more than the markup phase, right? Markup phase. Then what is accumulation and distribution? What is it? What is the chief characteristic of accumulation and distribution? And this is when folks come up with something online that's half-assed and just go through some schematic if they know it, or they just don't know. It is definitely not as popular as uptrend and downtrend being higher highs, higher lows, and lower highs, lower lows. The question now is, what is the chief characteristics? Just like higher high and higher low are to an uptrend, what is the characteristic to accumulation and distribution? This is what I'm going to answer now. Okay, and this is where real Wyckoff traders that really know what they're doing, this is something they can answer because this is what they specialize in. Anyway, so over here, the characteristic, before I explain it, I'll tell you that notice one thing. When you're talking about trend, higher high lows is an element of direction. It is a directional attribute. Higher highs and higher lows is directional, right? or lower high and lower lows is a directional. It has a directional attribute because trend is directional. Therefore, its attributes of higher high, higher lows are also directional. And how do you know? It's because you have higher, higher, or lower, lower. But in accumulation, do you have trend? No, you don't have trend. Therefore, it is not directional. Accumulation and distribution, they come before trend. They become before trend, and therefore direction has not been established. So accumulation and distribution are non-directional. They do not have higher highs, higher lows, and they do not have lower highs, lower lows. So what can be the chief, okay, another extension of that. Since they are non-directional, they are not characterized by price. It's a very bold statement. Because price is directional. It has a high, it has a low. Yeah? It has a high and it has a low. What I'm saying is accumulation is non-directional because it comes before trend is established. It comes before an uptrend or a downtrend in terms of distribution. Therefore, it is not characterized by price. Price is price is directional. Accumulation and distribution are non-directional. Therefore, accumulation and distribution are not characterized by price. Get it? So then, what is accumulation and distribution characterized by? If it's not a directional and it's not price, it must be volume. Because volume is not directional. It cannot be a negative number. It's not, I forget, I think the term is scalar, or I don't remember, but volume is not a directional thing. It's just something that describes an amount. So, make a long story short, accumulation and distribution are not characterized by price. They are characterized using volume. And volume can either be high or it can be low. Yes, it can be neither high or low. It can just be whatever, flat, right? So we call it flat. But when there is accumulation, the characteristic of volume is that it is high volume. At least on the left-hand side, when accumulation starts, it is always high volume. Accumulation is high volume. That's the chief characteristic of accumulation and the chief characteristic of distribution on the left-hand side. I'm not going to go into the right-hand side and, low volume test and all that. But when the accumulation is occurring, it is buy low. When you buy low, you buy a lot low, meaning you buy a lot, many. You buy a lot. Therefore, it is characterized by high volume. It is also not trend. Therefore, it is characterized, it's before trend and characterized by volume. It's not price-based, it's volume. All right. So high volume is the key to understanding accumulation and distribution. All right. So now to recap again, buy low, sell high is nothing more. It's is by extension accumulation, markup, distribution, and markdown. Markup and markdown within this model is described as higher high and higher low, lower high and lower low when it's marking down. This is nothing more than trend. Markup and markdown is trend, uptrend and downtrend, which is characterized by higher high and higher low, and downtrend by lower high and lower low. And when thinking about this, these are directional attributes, meaning they're higher high, higher low, lower high, lower low. They have directional element, right? Okay, so now what about the other two phases, accumulation and distribution? They are non-directional because they are non-trending. So then what describes them? And what are their characteristics? They are described by volume, because volume is also non-directional. So it is volume that describes accumulation and distribution. And this key description is that it's high volume. The area of accumulation distribution always has high volume. Always has high volume. All right. So this is the argument. And now, and you should know now the next thing I'm going to describe, okay? So since it's non-directional, and I've established it's high volume up and high volume down. Just like markup and markdown have higher high and higher low, and markdown has lower high and lower low, accumulation has high volume up and high volume down. Distribution has high volume up and high volume down. Okay, so we're going to work with this. All right, now let's look at the key elements of accumulation and distribution. I said they're high volume up and high volume down. So let's get rid of that. And I'll go into an example later, so relax. All right, high volume up and high volume down. Let's say right here, you have high volume. All right, high volume down in accumulation. So this first I'll cover accumulation is your climax. High volume up is your sign of strength or your change of behavior. All right, so we covered two, climax and CO, high volume down and high volume up. High volume down, this is for accumulation, okay? So high volume down is climax. What else? It can also be effort, all right? It could, if high volume up is going to be your change of behavior. It will also be your volume off the bottom. All right. That's basically it. So these these four behaviors describe high volume up and high volume down, and they are found in accumulation. At least on the left-hand side. The left-hand side of accumulation typically this is what you'll find. All right. On the right hand side, yes, I know you typically get low volume, right? I don't want to get into all of that, but yes, on low volume on the right hand side. Okay, but it's the high volume that I'm focusing on. So accumulation and distribution is buy low. Just like buy low, sell high, we have buy low and sell high, and yeah, so these are the four, 1, 2, 3, 4. These are the 4 key characteristics of accumulation and distribution that you'll see all the time, okay? If you're ready, and actually you'll only see it if you're ready, like you already know the model and all of that, then you see it. If you don't know, a lot of times you're not going to see it even. It's like you're blinded to it unless you already know what to look for. Anyway, so this is accumulation and distribution. So when this is entering markup and markdown, that is after you have these behaviors and you make your higher highs. So that's why you have your confirmation higher high, right? You get your higher high confirmation. This is the transition from accumulation to markup, right? So I'll try to cover that here. We go like that, and like that. At this point, you are in markup because you have cleared accumulation. Now you had a COB, you had climax, there's probably volume off the bottom there as well, right? So we'll talk about volume off the bottom, You might have a high selling wave after that that's unable to go lower. Effort somewhere around here somewhere. And then finally markup. And markup was here on the higher high. And we go higher. All right, so this is all of what I'm explaining now is the cycle of accumulation, markup, distribution, markdown. Understand this. If you are asked, what is an uptrend? You're going to add higher high, higher lows. When you ask what about accumulation and distribution, since they are non-directional, that means they cannot be described by using price. They are instead described by using volume first and foremost. The chief characteristic of accumulation is high volume, and that volume is expressed as these 4 behaviors: climax, effort, COB, and volume off the bottom. Even if there is a shortening of the thrust, which you see many times, chances are that shortening of the thrust has high volume. As the case here somewhere, here, I'll prove to you. Here you had high volume, relatively speaking, in the shortening of the thrust. But the more clear one was this volume up here, where this is evidence of distribution. Okay, you have volume on the way up in the form of shortening of the thrust that has more volume, on the prior 3 brick waves, because it's 14 and the priors are 11 and 6 and another 6, but this time it's 14. And so you have volume on the way up, volume on the way down, right? Similarly, let's see, And same thing over here. Volume on the way up, volume on the way down. In this time, it was identified by volume off the top. You could also call this a climax, because it's a climax bar. So it's the same idea. High volume on up, high volume down. Sometimes it's not that clear and you'll only see high volume down. And that happens as a result of what? As a result of lack of demand on the left-hand side. When the volume on the left-hand side is very poor, then you see high volume on the way down only. And you see shortening of the thrust and lack of demand and weakness, right? Anyway, again, at this low, what do you see? Volume on the way down, volume on the way down. Yeah, finally, here you have volume on the way up, volume on the way down, volume on the way up. Then you have the higher high. Actually, it came earlier right here, if you look closely. But this is more definitive. And you mark it as in markup now. Here you have, I don't think it's clear here, volume on the way up. Yes, you can say that this is volume on the way up on the here, but I want something even more clearer. And the only thing that's clearer is this, volume on the way down, right? Now, after it does that, there's up thrust, and after the up thrust, it breaks trend. It creates trend, sorry. It creates trend with the confirmation lower low. So just, now you want another example, volume on the way up, down, bang, more down, effort, whatever, right here. Finally cleared. Where is it cleared? Right up here. Bang, right there. There's your confirmation and fly. So again, my claim here, give me 1 second. So my claim here is as what higher high and higher low are to uptrends, what higher high and higher low is to an uptrend, high volume up and down is to a accumulation. What lower high and lower low is to a downtrend is what high volume up and high volume down is to a distribution. And both accumulation and distribution, when characterized by the high volume behaviors, will have the following behavior. Climaxes, change of behavior, also known as the sign of strength and sign of weakness, volume of the bottom, volume of the top, and effort. That's the claim. All right, if you all have anything else to add, just put in the comments. Thank you. Bye.